We are in banking chapter. We have done almost all the major things. Now a lot of peripheral things remain in banking chapter. We have done IBC, yes or no. Try to recollect what is insolvency and bankruptcy code. IBC, we saw the process of IBC. We saw what is corporate debtor. We saw committee of creditors. We saw financial creditors. We saw operational creditors. We saw waterfall chart. We saw insolvency professional, also known as resolution professional. We saw insolvency bankruptcy board of India. We saw information utilities. We also saw National Company Law Tribunal. We also saw Debt Recovery Tribunal. We also saw 330 days are remaining for 330 days is the limit for corporate resolution process. Yes or no? Do you remember all of that? We also saw PJ Naik committee recommendations. What were the 4 recommendations of PJ Naik committee? First recommendation was government shareholding should be reduced. Second recommendation, very important, appointment should be professionalized. Third was merge and consolidate the banks. And fourth, Indradhanush. And then there was one more, MD, CEO 5 years and WTD 3 years. What were the recommendations of Narsimham committee and which year it was launched, or which year it gave the report? In 1991 and 1998. Narsimham 1, Narsimham 2. What were the major recommendations? Nationalization should be stopped. There should be a global bank, so merge the banks, make a global sized bank. Private players के लिए equal level playing field दे दो. CRR SLR reduce, priority sector lending norms reduce, interest rates reduce, set up ARCs, introduce macroprudential norms, and help your banking sector grow, basically. Right? We move to another concept here. So remember, in the very first lecture we saw something called as differentiated banks. Do you remember? Under commercial banks I told we'll do it later. So we'll do differentiated banks here. See, this is all for prelims. I'm telling you, this is all for prelims. Differentiated banks. Now, differentiated banks are mainly of 2 types. There can be various banks, but these are mainly of 2 types. One is small finance banks. Second is payments banks. See, do you understand the word differentiated, which means they cater to only one function. They are differentiated. Differentiated means they are specialized banks. So small finance bank is a small bank. It is only catered to small lenders and small depositors, not big ones. Yes or no? My question is, Development Financial Institution, DFI, a small differentiated bank? Yes or no? Is DFI, you know DFI? Is it a differentiated bank? Yes, it is. Why? Because it is specialized. Differentiated means specialized bank. It is specialized only in long term. Yes or no? So it is also specialized. I'll come to that again. Let us read about, or let us know about small finance banks. So there was a report. Okay, there was a report called as, very important, or report by the committee, Nachiket More Committee. Nachiket More Committee gave the report in 2013. He was the erstwhile deputy governor, and Nachiket More Committee gave the report, and that committee said one bank should not have to give all services because it is not able to focus on the services. It is not able to specialize. Are you understanding specialization? So one bank, so we don't need doctors. We need super specialist doctors. In banks, we need specialized banks. So introduce something called as payments banks or small finance banks, or other kinds of differentiated banks were also mentioned. For example, DFI is also a differentiated or a specialized bank. So then after 2013 report was reviewed, and then finally in 2017-18 we came up with the regime of differentiated banks, which consists of mainly 2 types: small finance banks and payments bank. I hope you have heard of Paytm Payments Bank, Airtel Payments Bank. Small finance banks you might not have heard of, called AU Small Finance Banks, Jana Small Finance Banks. These are all small finance banks. Suryodaya Small Finance Banks. Okay, these are all small finance banks. So the Nachiket More Committee gave the recommendations for all of this. So minimum capital required. Do you understand minimum capital, which means minimum investment you have to do to open a small finance bank? If tomorrow you need to open a small finance bank, what is the minimum capital required? What is the minimum capital? Minimum capital required for a small finance bank is 200 crore rupees. Okay, minimum capital is 200 crore rupees. Very important, I am telling you. Does small finance, see, small finance bank, it is very easy to remember. How to remember small finance bank? It is just a normal bank but on a smaller scale. Use this technique to remember everything about small finance bank. It is a small bank, it is a normal bank but on a smaller scale. It is a normal bank but on a smaller scale. Okay? Do you think it is allowed to accept foreign direct investment? Sir, what is foreign direct investment? FDI. Foreign money, foreign inflow. So if today you are investing in gold, that is domestic investment. If today you are investing in gold which is situated in USA, that is foreign direct investment for USA, because USA it is coming from India. Na? Similarly, if someone is buying something, if let's say you are staying in a building and niche ka flat is bought by some Americans. Okay? The flat in which you are staying, the below flat, below the one which you are saying is brought by some Americans, then that is foreign direct investment. Yes or no? It is foreign investment which is coming to India. So do you think foreigners can invest in small finance bank? Do you think foreigners, or do you think small finance bank can accept foreign investments? The answer is yes. They can accept foreign investments. Do you think small finance banks can deal in foreign exchange services? Foreign exchange services hota hai na banks ka. They change money and they deal with dollars, dollar transactions and deal with all these things. So foreign exchange services be small finance banks can do. Yes, I am doing this all for prelims, and this is all for prelims, right? Do you think small finance banks have to follow CRR SLR norms? Small finance banks have to follow CRR SLR norms, right? All norms small finance banks have to follow. See, it is just like a normal bank but on a small scale. Sir, what is small scale in this? Now I am going to tell you what is small scale in this. Okay? At least 50% of loans hai na? At least 50% of loans should be up to 25 lakh rupees. Usse zyada nahi. Small loans should be up to rupees 25 lakh. At least 50%. ठीक है, उससे कम 60-40 you can give, 40% you can give big loans, 60% you have to give, at least 50% you have to give small loans. Second, very important, small finance banks, at least 25% of branches should be in unbanked rural areas. At least 25% of branches should be in unbanked rural areas. Right? What is the meaning of subsidiary? What is the meaning of subsidiary? Have we seen it somewhere? In tax chapter we had seen. What is the meaning of subsidiary? A company in which another company holds its shares is called a subsidiary company. So this small finance bank cannot have NBFC subsidiaries. Small finance banks cannot have NBFC subsidiaries. So small finance banks cannot invest in NBFCs basically. Small finance banks cannot own NBFCs. You know, there was another report in 2009 by Dr. Raghuram Rajan. 100 small steps. He said, open 100 small finance banks so that you reach all rural areas, unbanked rural areas. 100 small steps towards achieving greater financial inclusion. That was the report's title. Okay, so are you getting this? Small scale banks, they are very small. Sir, but Narsimham committee said कि global banks banana hai, merge karna hai. PJ Naik committee also said the same thing. Yes, they gave differentiated or conflicting opinions. So it is what you want to achieve. So we can achieve both of them at the same time. The normal commercial banks, normal size banks ko merge karo and make a big bank, and then let these small people play also, no? Right? This was all about small finance banks. Do you get this? Okay? We'll move on to payments bank. We'll move on to payments bank. Same thing, same condition. The only difference is minimum capital is 100 crore rupees. Same report, Nachiket Moore Committee report, 2013 report. Okay. Now, do you think Payments Bank can accept current account, savings account? See, I'll tell you what is Payments Bank. The name suggests Payments Bank. It is only for making payments. It is only for making routine payments. It is not for loans and advances. Are you trying to get it? It is Payments Bank. It is only for Paytm Payments Bank. You cannot borrow from Paytm Payments Bank. But you can do transaction from Paytm Payments Bank. Simple. So do you think you can open a current account or a savings account with a Paytm Payments Bank? Do you think you can do that? Current account, pay attention here. Do not write current account, savings account, yes. Fixed deposit, recurring deposit, no. Right? Do you think, simple question, do you think Payments Bank can give loans? No loans. One more question. Do you think Payments Bank can issue debit cards? Yes. You must have seen that white color debit card. Debit card? Yes. One more question. Do you think Payments Bank can issue credit cards? Sir, what are credit cards? Credit cards is nothing but you swipe the card, you have to pay 1 month later. Simple logic hai. See, when you swipe or when you use an ATM card or a debit card, instantly your balance gets deducted. In credit card is like using electricity. You use the electricity for 1 month and then you get the bill. Similarly, you use the credit card, jitna limit hota, let's say 50,000 is the limit. You can use it up to the limit in a month, and at the end of the month, you will get the bill of all your transactions and you have to pay. Okay? So what do you think? Can Payment Bank issue credit cards? They cannot issue credit cards. Why can't they issue credit cards? I just explained it to you. They tell you to pay after 1 month, which means, is it not that they are giving you 1 month loan? Today, if I swipe my card, I have to pay it on 31st July. Till 31st July, am I not getting the benefit of using the money because I'm not paying it now? Is it not in the nature of loan? And always remember, credit cards do not carry interest till the due date. So if I have to pay by 31st July, if I pay by 31st July, then I am not supposed to pay interest. It is an interest-free loan, but still it is a loan. If I pay after 31st July, can you guess the interest rate in credit cards? Just try to guess. Normally, loan में कितना interest rate होता है? 8, 10, 12, 14%. What is the credit card interest rate? Can you guess? 47 to 50% interest credit card. So as far as जब तक you are paying before the due date, 0% interest. So I do all my purchases personally. I do all my expenses on credit cards. Even if I have to spend 80 rupees, I will first give my card. Then the shopkeeper, if he says they don't accept cards, then I give cash. I do all my expenses on credit cards. Okay? Credit card is a two-edged sword because you immediately don't feel that the amount has gone from your account. So you keep on swiping because you don't feel like the amount has gone. But at the end, when bill comes, it's a long bill that you have to pay. But the benefit is that you get to use the money for 1 month. So I manage my expenses in such a manner that first 5 days of the month I spend all my I do all my expenses. I pay electricity bill and all of that, and I don't pay till the end of the month. So that 1 month ka interest I'm getting now because that money is in my bank account. Then at the end of the month that money gets debited from my bank account, deducted from my bank account. So for 1 month I earned interest, yes or no? These are all financial management techniques. No need to know for UPSC. So credit cards it cannot issue. Please bear in mind this is in the nature of loan only. Credit cards are always loans. Credit cards are always loans, so they don't allow you. Do you think Payments Bank can open ATM? Yes. Debit card, ATM card same ही होता है आजकल तो you withdraw cash. Do you think do you know what is banking correspondence? We had done in monetary policy chapter. One person going to all the areas and taking their money and withdrawing their money. Do you think Payments Bank can have banking correspondence? Yes, they can have banking correspondence. Right? Then next, see this. At least 75%. At least 75% of deposits. Deposit आता है? current account, saving account. This is not allowed. Whatever current account, savings account you are getting. So now tell me, they are not able to give loans. So they are not able to earn interest. Yes or no? So they don't have that much of financial stability. That is why FDRD is not allowed. Because how can you give them interest? You are not allowed to give loans. So what to do of FDRD? No? You use this money to give loans. But if you are not allowed to give loans, what is the use of this? Simple. That is why FDRD is not allowed. You get current account, savings account. You have to give them some interest. Where will you get that interest from? Loan though you are not giving. Remember the asset side of bank. What else is there? Investment in government bonds is there. But that pays very minimum because I told you government bonds are less risky is less return. So they will pay very less. So, but are they safe? Yes, absolutely they are safe. To keep, so see this is the correlation. If this is not allowed, this is also not allowed. I know, because, right? This is allowed, that is why this is allowed, that is why this is allowed. Barabar? To keep this safe, at least 75% of deposits. What kind of deposits? Is fixed deposit a deposit? No. Why? Because fixed deposit is not allowed. At least 75% of deposits have to be invested in. Where? Government securities. Did you understand? Yes or no? Government securities, T-bills. Now tell me, what is the average maturity of current account, saving account? Is it more than 1 year, less than 1 year? It is less than 1 year because short term it can withdraw any time. So invested in government securities or T-bills up to 1 year. Basically, pay attention here. Are you trying to match your assets and liabilities in this? Yes or no? This is your liability of less than 1 year. Your asset should be less than 1 year. This you are not allowing, so this is also not allowed. This is not allowed, so this is also not allowed. Are you trying to get the reason and logic behind payments bank? See, blindly by-hearting this doesn't make any sense. If loan is not allowed, credit cards are also not allowed. See, it is all interrelated. We want to, these are small banks. These are not big banks. We want to encourage savings among people. So that is why we allowed banking correspondence. We allowed ATM card. Everyone should have an ATM card. Even one who is earning 100 rupees per day should have an ATM card. Okay? 100 rupees savings per day, even 50 rupees savings per day will lead to a big amount for him after a point of time. Yes or no? At least 75% deposit should be invested in G-Secs or T-bills up to 1 year. Uske baad, whatever you want to invest, you can invest in risky assets also. And see this. How much is remaining? 25% maximum. If this is 80%, then 20% is remaining because it's at least. Maximum 25 bachta hai. Now, where can you invest? What do you think? Where can you invest this? I told you can invest anywhere. But Payments Bank ka rule hai, maximum 25% deposits, see this, have to be kept as FD with other banks. Khatam. You are not allowed to invest in market at all except government securities. You cannot accept corporate bonds. You cannot accept anything. Why? Risk. If that fails, this fails. And who is holding current account, saving account in Payments Bank? Small savers. See, we will hardly open a payments account, an account with Paytm Payments Bank. But a vegetable vendor who stays below our building, he might open a Paytm Payments Bank account. Yes or no? His savings has to be safe. His current account has to be safe. Hence, the deposits which banks get, they have to be invested further in safe avenues only. Yes or no? Did you understand? Yes or no? This do you remember the condition of unbanked rural areas wala branches of small finance bank? Do you remember this condition? At least 25% of branches in unbanked rural areas. Do you remember this? The same applies here. At least 25% branches in unbanked rural areas. ठीक है, दिस इज ऑल अबाउट पेमेंट्स बैंक. और क्या है, और क्या है? Do you think they have to maintain same capital adequacy ratio or different capital adequacy ratio? Now think logically. Why do you maintain capital adequacy ratio? Why do you maintain capital adequacy ratio? Why do you maintain capital adequacy ratio? Why? You need to revise these lectures very much. See, we are going at a very fast pace, but you need to revise, you need to watch every lecture at least 2 to 3 times. तब जाके वो समझेगा. Capital adequacy ratio. Why do we keep capital adequacy ratio? What is the formula for capital adequacy ratio? Capital upon assets. Why do we need capital adequacy ratio? To protect depositors so that when loans increases, capital should fall in. Yes or no? Do you think same capital adequacy ratio is required or not required here? For payments bank, do you think capital adequacy ratio is required or not required? Why required? They cannot give loans. They cannot give loans. किसका percentage लोगे? They are not allowed to give loans. So a different capital adequacy ratio is required. There is a different ratio. There is a different capital adequacy ratio required to be maintained. Why? Because they don't face any credit risk. What is credit risk? What is credit risk? What is credit risk? What is credit risk? Risk of defaulting. Risk of defaulting is credit risk. Did we do Basel norms or not? Are you recollecting all these things or not? If you don't revise, it will not make any sense. Every lecture is interconnected. Every lecture has some concepts from the past. Did we do Basel committee? Did we write 3 types of risk? Did we write market risk, operational risk, credit risk? Did we write credit risk? What is credit risk? Risk of default, risk of you giving money and him not paying it back. Is there a default credit risk here? Yes or no? There is no credit risk here. Why there is no credit risk here? Because there is no loans here. So if there is no credit risk, your CAR is not required. A smaller capital adequacy ratio is required. Do they have operational risk? Yes, they have operational risk because they operate in rural areas. They operate with small customers. There are operational risks. Yes or no? Are there any market risks? Yes, there are some market risks, not more, but some market risks because they are investing in the market. They are investing in government securities. Government securities are sold in the market. Yes or no? Okay. So that is why a different credit risk is required. Why a different capital adequacy ratio is required? Why? Because they do not have credit risk, but have market risk and operational risk. I told in the 3rd or 4th lecture, we will speak a lot of high level things. Okay, you need to revise. I am not speaking anything new also here. Okay, I am talking about some things which we have already done. So you should revise them. You should keep on revising them. Before starting the lecture, you should at least watch the previous 1-2 lectures fast karke, or you should revise the notes of the past 2-3 lectures at least, so that you are able to revise. See, credit risk, it should be on the tip of your tongue. Credit risk means risk of default. Finish. The game over. So a different capital adequacy ratio is required for payments bank. Okay, that is why I tell you, don't focus only on writing in the lectures. Try to recollect these things. These are more important. Writing, so you will get it anywhere. You will get it in the books also, all these things. But what is more required? So now you don't need to remember or memorize कि loans नहीं है, this is there, this is there, this is not there. Logic है, if this is not there, this is not there, this is there, this is there, this is there. These are all interrelated. If you cannot give loan, there is no credit risk. If there is no credit risk, capital adequacy ratio is not required. किसका percentage लोगे? There is no loans in the bank. There are no loans and advances given by the bank. From how will you calculate capital adequacy ratio? There is a different capital adequacy ratio which is required, and why is that required? Because they still face operational risk and market risk, but not credit risk. Okay? This bank is specifically established for high volume, low value transactions. High volume, low value transactions. ठीक है? High volume, low value transactions मतलब the number of transactions are very high, but the amount per transaction is low. ठीक है? High volume, low value. You are not doing transactions worth lakhs of rupees, crores of rupees, but you are doing many transactions worth 50 rupees, 100 rupees. High volume, low value transactions. ठीक है? This is transactions. TNX is transactions. Why would they not have high volume transactions? Try to think. Why would they not have high value transactions? Why would they not have high value transactions? Because there is no fixed deposit, there is no loan. These are usually high value transactions. You don't keep fixed deposit of 1000 rupees. Yes or no? You keep fixed deposit of 1 lakh rupees, 2 lakh rupees. You keep it for a long time. There is no fixed deposit, there is no loans here. So there cannot be high value transactions. Do you withdraw lakhs of rupees every month from your savings account? No. But you might keep lakhs of rupees as fixed deposit. But you are not allowed to keep fixed deposit. See, I think you are not understanding. You are confused. Are you sure? You ask me 100 times. But don't be confused. Don't be, I will read at home and I will do. You guys who are watching at home also don't think I will read it nicely after 1 month. I will read it. Don't do that. That is not how economics is studied. Right? You ask me many times. I am here for you only. Okay? I asked you a question. What do you mean by high volume, low value transaction? What do you mean by that? So, what do you mean by high volume, low value transactions? Small transactions, but lot of transactions are happening. Why not low value? Why not high value transactions? Why high value transactions don't happen in payments banks? Because you are not allowed to open fixed deposit. Because you are not allowed to take a loan. So high value कहाँ से आएगा? ठीक है, you are only allowed to open a current account or a savings account. There will be lot of transactions from current account and savings account. You pay your bills, you withdraw money, you swipe your ATM, etc. And your salary also, let's say salary also comes here. But that will be low value but high volume. Yes or no? Many transactions in a month. You might buy grocery, you might go for shopping, you might go for paying your utility bills, everything. So that will be high volume but low value transactions. Yes or no? Are you understanding the reason behind payments bank? See, very honestly, I'll tell you, since the first lecture I've been telling you, by-hearting is not the way to study economics. If you study economics by-hearting in the exam, when I show you MCQs in a while, you will be confused. 100% you will be confused. Okay? Do you know what is bank rate? What is bank rate? Rate at which? Bank rate is the rate at which RBI gave money to banks for long term, which is now discontinued but still established. Yes or no? Do you remember bank rate? See, that is why I tell you should know the concepts by heart before solving MCQs. You should, if you feel like doing it, you should watch all my lectures again, speed karke, 2x, 3x karke. You should refer to all the PPTs again if you want, and you should know the meaning of each and every word mentioned in our lectures. Each and every single word you should know, unless if I have told you I will tell this something later. For example, I have told you markets chapter, I will teach a lot about detail about FDI and all of that. In BOP, balance of payment, we'll see all of that. But I want you to understand the reason why we are setting small finance banks. What is the reason? See, UPSC will ask these reasons. Small finance banks were set up with the intention of financial inclusion. Do you think they have achieved the objectives? What you will write in this? What do you think you will write? You have 6 minutes to write this answer. What do you think you will write in this question? Then don't tell sir ne nahi padhaya. But I am telling you the logic behind it. Rest you will get it from newspapers and articles keep on coming. But you should know the logic behind small finance banks. Even if you don't know the exact answer, at least you will know what is the purpose of setting small finance banks. What is the purpose of setting small finance banks? What is the purpose of setting small finance banks? Why are we set up small finance banks? Why are we setting up differentiated banks? What is the purpose of differentiated banks? I have told you this 15 minutes back. I told you. What are differentiated banks? What are differentiated banks? They are banks which are specialized for a particular purpose. They are specialized banks for a particular purpose. See, it is all English. ऐसा भी नहीं कि it is a very foreign, some other language. It is all English. English word है ना, differentiated. Differentiated means what? Different है. Banks are different, specialized है, specialization है. ठीक है, someone is a heart surgeon, someone is a brain surgeon. They are different fields, right? Someone is a neurologist, someone is a cardiac surgeon, etc. So small finance banks are established with the reason of financial inclusion. They are small banks. Financial inclusion, these words have to be there in your answer. Don't expect me to write everything on the board. Yes or no? Small financial banks are established with the reason or with the objective of financial inclusion. They are small banks. They give small loans. Can small finance bank give loans? Are you sure? Yes, I told you, small finance banks are like normal banks but only on a smaller scale. Normal banks can give loans? Yes. So small banks can give loans? Yes. Small finance banks can give loans on a smaller scale. These are the objectives. At least 25% branches have to be in unbanked rural areas. At least 50% of the loan should be up to 25 lakh, not more than that. You can give uske upar ka, you can give big loans. At least small loans should be given. Loans likha hai maine yahan pe. ठीक है, they can do FDI, they can take FDI, they can deal in forex, they have to maintain CRR, SLR, they have to do everything. The only thing is they cannot venture into NBFC business. They cannot establish a subsidiary which is a non-banking financial company. Now coming to payments bank. What about payments bank? Payments bank, as the name suggests, they are made for payment transactions and not lending transactions. They are made for payment transactions. You transferring to someone, he transferring to someone else. They will take commission in between. They will earn money. Don't worry about that. Otherwise, why would Paytm and Airtel open payments bank? They are also established with the objective of encouraging financial inclusion, financial saving, but they are high volume, low value transactions. Why low value? Because you cannot open FD, you cannot open RD, you cannot take a loan also. These are usually high value transactions, yes or no? Right? But since you don't have this, you are stuck with only low value transactions. Now, why high volume? Because you are allowing current account and savings account to be opened. You have hundreds of transactions per month in your current account and savings account. Yes or no? What is current account? Why is current account open? Current account is open for business purposes. So LevelUp IAS would have a bank account which would be current account. Me, Santosh sir or any other sir would have a personal account which is savings account. Tomorrow if I start my business, I would open a current account. What is the difference between them? Current account has lesser restrictions compared to savings account. We will do this in money supply chapter. But let's say savings account you need to maintain minimum monthly balance. Current account has no minimum monthly balance. Current account you can also withdraw more than what you have in your account. So let's say you have 20,000 in your account. You can also withdraw 25,000. That 5,000 will be treated as a loan by the bank to you by default. Current account has those facilities, you can say. Okay? So payments bank was established into payment bank, or all these banks were established according to which report? Nachiket More Committee report 2013. Right? Current account, savings account you can open in the bank. Loans the bank cannot give loans. If banks cannot give loans, bank cannot accept fixed deposit or recurring deposit, because this is what is given as loans. Yes or no? Are you understanding this? This is nothing but balance sheet only. I am showing you deposits and then I am showing you loans and advances. Yes or no? Is it not clear? Fixed deposit, recurring deposits cannot be given as loans, but you can accept current account and savings account. So deposits thoda bahut hai. Now what to do? You cannot give as loans. So where to give that? Where to keep that money? How to give interest to these people? You have to invest in government securities or T-bills, but only up to 1 year. Why? Because the maturity of current account and savings account is lesser. We have seen all this. So we are trying to match our assets and our liabilities. Yes or no? And greater than 75% of deposits you have to keep. And then rest of the money you have to keep in bank FD with other banks. FD bola hai. So this FD would fetch a little bit higher interest. So you earn interest on this, and you pay interest to these people as a bank. Yes or no? Very simple. Credit cards cannot be given because it is in the nature of loan. Debit cards, yes. ATM, yes, definitely it can be given, right? Then same reason is greater than 25% of branches in unbanked rural areas can be given, can have to be opened. Different capital adequacy. Why different capital adequacy? Because it is not giving loans. It is not giving out loans and advances. So if this is not there, how would you define the capital? And a capital was dependent on this, na? This is not there. So different type of capital adequacy ratio is there. Why? Because credit risk to nahi hai. This is credit risk. Credit risk is not there. So if credit risk is not there, to kya? Operational risk is still there. Market risk is still there. Remember, there are three types of risk. We have seen in Basel pillar number 1. Yes or no? Basel 3 pillar 1. Right? That is why car, and then high volume and low value transactions. Did you understand finally? Yes or no? Or still you have any doubt? You have to just think logically why something is there. Why credit cards are not allowed? Why debit cards are not allowed? Or why debit cards are allowed? Why credit cards are not allowed, etc. Samjha? Next we go to Mudra. M-U-D-R-A. Next we go to Mudra. Have we seen Mudra somewhere in our lectures? Where? Where? No. No. Banking chapter only. It's a reinvestment bank. It is a refinance agency. It is a development bank. SIDBI, Mudra, NHB. Remember? Remember in banking chapter, in the end, we had written somewhere here. Yes or no? See this. What do you mean by micro units? Small businesses. Small village level, small household businesses. So suppose your mother has a tiffin service. Your mother cooks up and provides tiffin service to nearby neighboring areas. So you are a small unit, you are a micro unit, you are doing business. Micro units, development. Did I tell you what is refinance? Yes or no? It gives finance to the financiers. It is refinance agency. So this is Mudra Bank. So do you think, so tell me, will it give big loans or small loans? Will it give big loans or small loans? Small loans, it will give small loans. Okay? Did we see NBFCs on the RBI website? Types of NBFCs, yaad hai? There was one more type. You might not remember, that is okay. There was one more type called as microfinance institution. I had shown it to you. Microfinance institution. They are called MFI. They are NBFCs. Huh? It is called NBFC MFI. Okay? As the name suggests, microfinance institution. They are NBFC. They give deposits and loans. I hope you know the difference between banks and NBFCs. Mudra acts as the regulator of NBFC MFI. Remember, I told you NBFC is under various controls. Some are under the control of RBI, some are under the control of SEBI, some are under the control of National Housing Bank. This item is under the control of Mudra. Okay? Microfinance institution. So Mudra is not only a refinance agency but also a regulator of NBFC MFI. Yes or no? Okay? Now, very important. Who Mudra will give loan to whom? Mudra will give funds to whom? Who do you think? It's a refinance agency. So Mudra will give funds to whom? Banks, NBFCs, financial institutions. Banks, NBFCs, financial institutions. For what purpose? Small, micro units purpose. Yes or no? So the main purpose is, see this, non-agriculture self-employment. Why non-agriculture? Already commercial banks are giving so much of loan to agriculture sector. We want to move people away from agriculture because there are a lot of people in agriculture. We'll do this in agriculture chapter. There are a lot of people in agriculture. There are a lot of farmers. There are a lot of people who are dependent in agriculture, but they are not earning anything. We want to encourage people to move to something else. For example, handicrafts. For example, animal rearing. For example, beekeeping. You know, there are so many related avenues. Go in food processing. So, non-agricultural self-employment. Why self-employment? Because today, if they self-employ, tomorrow they will be able to employ 2 more people. Entrepreneurship बोलते हैं ना इसको. In urban areas, this is called entrepreneurship. Self-employment. So, to encourage loans to non-agricultural purposes and self-employment purposes, non-agri self-employment, Mudra gives loans to these banks and these banks give loans to the borrowers. Yes or no? If I am living in a village, if I have to borrow money for starting my own business, I will approach a bank. That bank will take money from Mudra under this scheme. See, this was a scheme which was launched in 2015, Mudra Act. There is a Mudra Act which governs this bank and it is called as Mudra scheme. The scheme was to encourage people from SC/ST backgrounds who don't have those opportunities to start their own businesses. Do you think commercial bank will give them funds for starting their own business? Commercial bank will demand collateral. Commercial banks will demand कि ये paper दो वो paper दो, right? That is why this bank was established to encourage non-agricultural self-employment on a small scale. ठीक है? On a small scale. ठीक है? Now, do you think collateral would be taken or not taken? कोलेटरल होता तो कमर्शियल बैंक के पास ही चले जाते. We would have gone to commercial banks. They have come to Mudra and these banks because they need collateral free loan. ठीक है? Now, do you think the amount would be high or low? Amount would be high or low? Amount would be low because they need some money to start their own business. Yes or no? So, they have 3 products. Mudra loans में 3 products आते हैं. I'll write it there. They have 3 products. Shishu. Second is Kishore. Third is Tarun. Oh sir, बच्चा बड़ा हो रहा है. So which loan would be smaller? Shishu would be smaller. It is up to 50,000 rupees. Small loan up to 50,000. ठीक है? This is up to 50,000. This is how much? 50,000 to 5 lakh rupees. ठीक है? And this is how much? 5 lakh to 10 lakh rupees. So up to 10 lakhs, you can get a loan from under Mudra scheme. Okay, up to 10 lakhs you can get a loan under Mudra scheme depending on your requirement. Did you understand Micro Unit Development Refinance Agency? Let us go to the website. देखते हैं कुछ नया है क्या? Is there anything new? See this. Loans to people like these. Micro units है ना? Non-agricultural है ना? They weaving, handicrafts, making something, pottery. Yes or no? See this. To be an integrated financial and support services provider par excellence benchmark with global best. Sustainable and value-based entrepreneurial culture. You know, if you write this in your mains, now you will get very high marks. Right? See this. Read this. What is this? These loans are given by banks, commercial banks, RRB, small finance banks, right? समझा? Very simple to understand. Whatever we studied, वही है कि you cannot approach Mudra bank. You have to approach banks, small finance banks, small finance banks, RRBs, MFI, NBFC. Then they will get that money from Mudra bank. Mudra bank is a refinance institution. Always see this. है ना बराबर? See this. Read this. Okay. One more thing. Did you understand this? Very simple. One more thing. See this. Mudra loan is extended for a variety of purposes which provides income generation and employment creation in manufacturing, services, retail and agriculture allied activities, not agriculture activities. Sir, what is agriculture allied activities? Animal husbandry. Hell, like some allied means some related activities. So, what are the activities related to agriculture? What do you think? Not agriculture, but related to agriculture. Poultry farming, food packaging, food processing, food packaging. Yes or no? Crab farming, etc. Milking, poultry, to theek hai. So, very important. Agri-allied is, see, this was not there 2 years ago. When the scheme was launched, this was not there. This was added recently, 1 or 2 years ago. Right? Manufacturing, services, retail and agri-allied activities. So, let us add that. What are the activities? Manufacturing, services, retail and very important, agri? No. Agri-allied? Yes. Activities. Did you understand Mudra? It is a refinance agency for encouraging small time entrepreneurs. For encouraging entrepreneurship on a very small scale. समझा? ठीक है? Now, what are we looking at? Differentiated banking or wholesale or common banking? Differentiated banking, which means specialist. There is another viewpoint which says ki don't differentiate, because the more you divide, the more resources you need. Let one bank handle everything, because let there be one big bank and let there be handle everything. So both sides are there. So one is called differentiated banking. Which we know, yes or no? Next is called as, see this. Universal banking. Provide all services. Provide small loans, big loans, borrowing, deposits, all types of deposits. This is known as universal banking. This is also known as cafeteria approach. Why? Why cafeteria approach? Because you go to a cafe, there is pura menu, everything, you can choose what you want. It is not that you are going to a vada pav store where only one thing you will get, which is vada pav. This is vada pav store. Yes or no? This is a cafeteria. You go there, you get so many things you like and you can have it. Understood? Now I hope you are able to appreciate there are benefits to both. Universal banking mein the benefits are ki one staff is giving all loans, so less people would be required. Here the benefit is ki specialized people would go there. Yes or no? What is DFI? Development Financial Institutes. Can I say it gives long-term loans? Yes. That is also called as wholesale banking. Samjha, wholesale. It is giving big amount. The amount is big to construct bridges and all. L&T would not demand, hey, give me 100 crores. It will amount big amount. 2,000 crores, 5,000 crores it will demand. So that is also called as wholesale banking. These are the terms which I think we should be aware of. Okay? Next, what do you understand by the term FDI, Foreign Direct Investment? So what I would do is I would keep foreign direct investment pending. We will do balance of payments chapter and then I will come back to foreign direct investment, because I know you don't have much clarity on foreign direct investment. It is nothing but foreign money investing into your asset. Okay? So let's say you have started a company and some foreigners are wanting to invest in your company, which means they want share of your company. So that is foreign direct investment. What are the different types and why is it called that? That we'll see later, because now it will be a bit complicated. I'll teach you very interesting something. I hope by now you understand balance sheet. Do you understand balance sheet? So please help me. I will call this as balance sheet. Where is capital? Very quickly tell me. Capital. I'm not even writing asset and liability now. Hai na? Capital is here. Yes or no? Where do you think is cash? Bank ka cash. Yes. Cash is an asset, na? Cash is an asset. Cash would come here. Yes or no? Where do you think is government securities? Government securities. ठीक है, this is fairly simple. Now, where do you think is loans and advances? बराबर? What is the relation between capital and loans and advances? Very quickly. Capital adequacy ratio. Capital adequacy ratio. Very good. Who has to bring in money when capital adequacy ratio falls below the limit? Owners. Owners have to bring in money. So let's say today's capital adequacy ratio requirement is how much? 11.5%. Which means every 100 rupees you give loans, 11.5 rupees has to be there in your capital. Tomorrow that 100 becomes 200, which means more 11.5 has to come. Bank will call its owners and bank will say, sir, we need to maintain capital adequacy ratio. Yes or no? You need to provide more funds. Owner will say, how much more funds? Bank will say, 11.5 is already there. 11.5 more we need. So please bring, and they will bring. Now question comes, who is the owner of public sector banks? Government. Let's say government is the owner. Government is the owner, right? When capital adequacy ratio falls, whom will the bank call? Government. Bank will give money. Where will government get that money from? Budget, taxes. So is it our money which is going in the banks? Yes, it is our money. Yes or no? We have paid our money. Revenue receipts, capital receipts, whatever. We have paid our money which is going here. Yes or no? Because government के पास पैसा आएगा ना? From us only. Government will get money from us. Are you understanding this? Okay. Don't you think maintaining capital adequacy ratio increases fiscal deficit? Think and tell. Now this is the highest level of discussion we are having. Very high level. Don't you think if RBI increases CAR tomorrow, fiscal deficit of government will increase? How? More funds required, more borrowing required, more taxes or more borrowing. Beyond the point, taxes also fail. More borrowing required, fiscal deficit is high. Yes or no? Now come in the mind of managing director of a public sector bank. He knows that no matter how his bank will perform, he is going to get funding from the government. So even if loans go bad, he will try to increase loans and advances, give 200 new loans, give 400 new loans. He will try to do that because he knows to maintain this, government is there. See, when private owners are there, they ask the manager, why loan has turned bad? Why are you giving new loans when previous loans are not recovered? Government doesn't have time. Government is social obligation. Okay? Government wants to protect whom? Depositors. I hope you know this. Okay? But is this not a dilemma? Capital adequacy ratio is controlled by RBI. Due to monetary policy, your fiscal policy is getting affected. Are you appreciating this? How deep it is? Okay? Now, the solution to this, government came up with a solution to this. Acha, by the way, when government will pour in capital, government will give cash. Okay? What will government is giving cash? Yes or no? Okay? So now fiscal deficit is increasing. So how to pour capital in balance sheet or in how to increase the capital without increasing fiscal deficit? That is the question economists had. They came up something. I'll tell you how it works. You can increase the capital without increasing fiscal deficit. See, tomorrow if RBI increases CAR to 15%, what will happen? Everyone will have to increase capital. Yes or no? I'll show you one thing, how it works. It's very interesting, very interesting. Okay? I'll show how it works. It is very interesting. Right? See this. Government saw banks are having a lot of cash. Banks have cash. Banks don't have cash problem. Problem is banks need to convert this cash into capital. Okay? Government says, use this cash to buy my bonds. What will happen? The cash will go to whom? Government. What will government give them? Securities. Now who has cash? Did fiscal deficit increase? No. They are using banks' money to fund banks. Samjha? This is a very innovative solution. They saw that banks have a lot of cash. So they said, give me. Take my bond. Bond is here. Cash is gone. It has turned to capital. Okay? This is called as the very act of government putting in money or any private person putting in money. See, initial capital, you need more capital, yes or no? So that is called as recapitalization. See, English hai. Yes or no? Recapitalization. English hai na? Recapitalization. But here pe special situation is they issued bonds. They took the cash and they put the cash again here. Those are called as, see, this is an act of recapitalization. Those bonds are called as recapitalization bonds. Samjha? So recapitalization bonds are used to recapitalize the banks without incurring fiscal deficit. Did you agree with this? Do you find it very amusing? Yes or no? Samjha? This is known as recapitalization of banks. When government issues these bonds, see, every time government will not issue these bonds. Sometimes government incurs fiscal deficit and recapitalizes. What if bank doesn't have cash? What if bank doesn't have cash? Then this option gets cancelled. Then normal recapitalization would have to be done. But here what it is doing, it is taking its cash, giving securities, and that cash now is with the government, is going to capital. Recapitalization bonds. 2 times in the recent past 5 years, 2 times government has resorted to issue of recapitalization bonds. It is nothing but conversion of cash into capital. Yes or no? Via government, because government is the owner. Right? You know, 2-3 years ago, economic survey said that bank managers are afraid of 4 C's. 4 C's. CAG, Comptroller and Auditor General, CBI, because any NPA happens, they are persecuted, and 1 or 2 more, corruption, and then 1 more C was there. So because a lot of NPAs were increasing, 2-3 years ago, I told you RBI asset quality review was done in 15-16. So many bank managers were under lens, were under the scanner. You were corrupt. But always keep in mind, even with the best of intentions, you don't know when a loan will turn NPA. The problem is if you are not checking his documents properly and giving loan only for the purpose of business. If he gives you proper documents, if you do proper checking and give loan and then it turns NPA, then it is not your problem, na? I mean, who predicts the future? He might run away or he might genuinely be in default, but that is not bank manager's problem. Yes or no? When the problem arises, when the bank manager, in the pursuit of increasing his salary, in the pursuit of increase his business, he keeps on giving loans. And this does not happen at the lower or medium level. This happens at the highest level. The culture is what matters. Read about Yes Bank. Yes Bank is now failed. It is starting to recover. So Rana Kapoor, who was the founder and chairman and managing director of Yes Bank, he was very aggressive. He just wanted this to increase. NPA hoga, chalega. Just increase this. So if this is increased without looking at the documents, without doing proper verification, what do you think will happen? NPAs will happen. When NPAs will happen, banks will fail. When bank fails, what happens? Everyone knows. Do you understand recapitalization? Achhe se? Yes? What is asset liability mismatch? What is asset liability mismatch? Timing and all. Okay? I will teach you 2 to 3 more concepts, then we'll stop. Next lecture, 10 minutes, we will have to do banking, and then we will continue with MCQs. Next lecture, we have to do MCQs. Right? See this. When you go to bank, what would bank ask you for? If you ask bank for a loan, what do you think bank will demand? Salary documents, how much do you earn? Will bank check how much salary you have and how much loan you are asking? Yes or no? Simple. So bank will check your salary. Yes or no? Huh? And bank will see uske samne how much is your EMI. Do you agree? Higher the better or lower the better? In this case, the ratio. Salary upon EMI. Higher the better, lower the better, the ratio. Why? When this is high, ratio is low. So higher ratio is better or lower is better? Higher ratio is better. You are having 50,000 as monthly salary. Your monthly EMI is 20,000. ठीक है? Ratio is 2.5. Let's say your monthly EMI is 2 lakh. Then what happens? What लगती है? So higher is better. Do you agree with this? Does everyone agree with this? If everyone agrees with this, then you have understood two concepts of finance. Now, this ratio, can I break this down into two parts? One part is salary upon, I would not take entire EMI, I would take only interest cost. I want to see how much is my salary covering my interest cost. Samjha? Salary upon interest cost. What is interest cost? You take a loan of 10 lakh rupees, you have to pay 2% interest cost. And then secondly, what I do is, I take salary upon I take interest plus principal. Principal pata hai na? Principal plus interest is your total EMI. So I have done nothing but I have broken this EMI down. This will have both components, na? Interest and principal. I hope you know basic maths, principal and interest. Principal is the amount you take and you repay it. Interest is on that you repay some interest. Yes or no? Do you understand these two ratios very clearly? Higher the better or lower the better? Higher the better, the lower, or lower the better, higher the better. Out of these, what do you think? Which ratio will be lower out of these two? Which ratio would be lower? So you calculated these two ratios. Which ratio would be lower? This ratio would be lower because the base is big. It has principal also. This was using desi terms. Now I will use finance terms. Same here. This is nothing but, okay, this is nothing but fancy term hai thoda. You have to buy hearted, nothing but इसको EBIT बोलते हैं, EBIT. I will explain, don't worry. Can I call this as my debt? Debt is nothing but loan which includes your interest. ठीक है? This ratio is called as, see this. What are we measuring here? Earnings before interest and tax. Which means before I have to pay any other interest, before I have to pay tax to the government, how much is my gross earnings? How much is my interest cost? Same goes for here. Yes or no? Did you understand this? It's the same thing. This is the normal version. This is the hi-fi version. Higher the better, lower the better, higher the better. This is called as, see English, see the English. Interest coverage ratio. Do you understand why? How much is your income covering interest? 2 times, 3 times, 4 times. How much is your income covering interest? You have to pay light bill of 2,000 rupees. Your income is 20,000. You are covering the light bill 10 times. Yes or no? Interest coverage ratio. Fancy term hai, but yahi hai. This is also called as profit before interest and tax. This is also called as sometimes profit after tax. In some ratios, after tax is taken. Some ratios before tax is taken. Nothing will change. Okay? And this, what do you think this is called as? You are adding the principal also. We know it is called as debt. So can I call it as debt coverage ratio? Did you understand this? Yes or no? Yes or no? So banks use these ratios to calculate which loan is risky, which loan is less risky. Which will be less risky? Higher ratio, lower ratio? Higher ratio would be less risky. Yes or no? Higher ratio would be less risky because you are covering 5 times. We'll give you more loan. Arey, you are covering only one time. Barely you are able to meet your interest. What will you be able to do with your debt? Yes or no? This is called as interest coverage ratio. This is called as debt coverage ratio. Interest, interest. Okay? Now I'll give you some terms for these so that you don't get confused. It is the same. Same matlab it is used. So this can be earnings before interest and tax. This can be earnings before tax. This can be earnings after tax. And instead of earnings, you can use the word profit also. Okay, different ratios use different names. It's the same thing. Did you understand this? Sachi batao. Interest service, we are now at the highest level. We have spoken about recapitalization bonds. We have spoken about recapitalization, how the process works. We have spoken about interest coverage ratio, debt coverage ratio. This is also called as interest service coverage ratio, debt service coverage ratio. See, same hai, more or less yahi hai. Did you understand this? Right? Too many concepts in this lecture as well. I told you, banking is an ocean. Banking is an ocean of concepts. You will have lot of concepts here. Okay? So I think we should stop here, and we will start with MCQs in the next lecture. We'll definitely start with MCQs in the next lecture. And banking, if I tell you 1 or 2% is remaining, otherwise I will club that with balance of payments chapter. We'll cover that because FDI in banking is a topic which is remaining. So first I will have to explain what is FDI, and then FDI in banking will come. So in balance of payment chapter, I will explain what is FDI, and then FDI in banking will do. Okay? So probably in the next 2 lectures, we'll cover money supply, we'll cover MCQs, we'll cover fiscal matters also, and balance of payments we'll try to cover as soon as possible. Right? Keep on revising. I hope you understood how important it is to revise, how important it is to know these concepts. See, if you don't revise this, you will forget this tomorrow. I guarantee. This has to be revised. This has to be understood. Okay? It's okay if you don't understand it completely now, but by every subsequent revision, you will be able to understand it. But for that, you have to revise subsequently. Yes or no? If you don't revise, then it doesn't make any sense. Okay? We'll stop here. This was a short lecture. So I will give you time to write all this, but I will send the PPT also. So I think we stopped here last time. So this also we saw, no? So you can pause the video here. Next, you can pause the video here. Payments banks and small finance banks are also called as differentiated banks. Yes or no? They are called as differentiated banks. Next, Mudra. I hope you know the discussion on Mudra, micro units development refinance agency. Why micro units? Why refinance? It is also the regulator of NBFC, MFI. I have told you so many things. You know, this is all more than what is required, but I have told you. Okay? You can pause here. Next, differentiated versus universal banking. This is common. Next, this you have to spend time on this. You can draw this recapitalization and recapitalization bonds. These are all recapitalization bonds. If bonds are not used, this is a very generic term. So recapitalization can be by way of recapitalization bonds or by normal recapitalization also without the use of bonds. Now, do these bonds carry interest or not? Sometimes yes, sometimes no. It depends on the government. When it does not carry interest, banks cry. Yare, why you are taking away our cash also? This is your responsibility. You are taking our money and giving it to us only without interest also. Sometimes they are interest bearing. Next, very important. I'll pause. You can pause it here and you can write this down. You can take this down. Right? So we'll stop here. Please keep on revising. It is very important for you to keep on revising. Otherwise, it becomes very difficult. Okay? So I hope you understood this. We'll stop here. In the next lecture, we practice MCQs and start with balance of payments. Thank you.